Hello, this is Steve Malone with ComsFX. I hope you're doing well today and you're getting some good trades. As of late, it's been fairly difficult for some traders to make heads or tails of the market. A lot of up and down has been seen, and if you're sitting there trying to trade the market based on a trend model, it's been difficult. What I would suggest you do is look at the market from a range-bound perspective, because that's really what we have with a lot of currency pairs. So today what I want to do is to share with you an intraday technique for catching reversals. Now I'm looking at the synergy trading model, which includes the Traders Dynamic Index down below. And what I've added to my Traders Dynamic Index is an 80 level and a 20 level. Now you can do this on a 5-minute chart, you can do it on a 15-minute chart. And what we're looking for is the Traders Dynamic Index green line to break above 80 or to break below 20. And we're looking for what I call the TDI hook. It's like a fish hook. And what we're looking for is the market to hook and move back from the bottom or from the top back towards center. And this is a good indication that the market can potentially make a reversal, because what we're comparing is we're comparing price action to market sentiment. If market sentiment is way down low, eventually it's going to have to move back towards center. Or if it's way up high, it's eventually going to have to move back from the high back towards center, which is about the 50 level. There's a few things to be aware of though. Remember that when you trade reversals, the market could decide it wants to continue going that way. So use proper money management and keep your stops fairly tight. Also consider the market baseline, the yellow line. The yellow line represents the overall market direction. And what we're looking for is the market baseline to be somewhere near the 32 level or somewhere near the 68 level. If they're near those levels, then there's the higher probability of a good reversal. If they're sitting right near the 50 level, there's a good chance that we won't get much of a reversal at all, maybe a bit of a reversal. As we can see here, the market came up, hooked over, and back down, giving us a good indication that the market was a bit overbought in this case and looking to come back down. However, the market baseline hadn't caught up yet. It's still sitting here at 50, and so the pullback that we got was very slight, not much. By the time we had this hook, the market just stayed in a range and moved down slightly, about 10-11 pips was all. And so what we're looking for is an additional indication of reversals in the market. And what I like to look for is divergence. So I look for an extreme situation in the Traders Dynamic Index matched with divergence. And here's a good indication of it right here. You can see that we have higher highs in price and we have lower peaks in our Traders Dynamic Index. You see that I have the high point here and then I have a lower high point. Now with this, there was some economic news that came out that was negative on the euro, so we had three situations occur simultaneously. We had an overbought situation in the Traders Dynamic Index. We had regular divergence, which is an indication of a potential reversal, and we had negative news on the euro, and therefore we end up with a strong move down in the euro dollar. Now sometimes though you're not going to get all three combined. As you can see over here, the market was meandering a bit and came down to a low point. So we get down below the 20 level and I'm looking for reversal. Now we want to make sure that the green is over the red going back. This is not quite to the 32, but getting there, and it takes some time for it to eventually get going. One way of trading this is to simply look for the Traders Dynamic Index green line to move from the 20 level up towards the 80 level or the 68 level. So in this case, we see that we're way down low here at the 20, and eventually the green line moves all the way back to the 68. So if we entered our trade somewhere in this area on the crossover and managed to hang in there until we got just about up towards the 68 in the Traders Dynamic Index, it wouldn't be much, 10, 11, 12 pips in this trade. So not a whole lot there, but that is one way of trading this. Let's take a look at a couple of other charts here. Again, you can do this on the 5 and 15-minute charts, but as you can see in this case, we're way down low, below the 20. We can see that the market baseline is down here at the 32 level. This should be a good setup for a move higher, and sure enough it was. We get the crossover and that happened right about here. We get the crossover and then the move back up. So from this point up to right about the 68 level here, the market moved up, and that gave us a trade in the ballpark of about 70 pips. That's a nice trade, just catching the bottom and trading it back up. Now, in this case here, I want to point out to you that over here we had this high point right here. Okay? Now, on this high point, you can see we have a peak and a higher peak. Same thing here. We have a high and a higher high. So those are fairly matched up. But the market comes over. Look where the market baseline is, the yellow line. It's right at the 50 crossing up. When you see this, be careful. You have a greater probability when the market baseline, the yellow line, is all the way down to 32 or all the way up towards the 68 level. So in this case, we hit a high point. This was way up high. We came over, but the market hasn't given yet, even though there is a sign of divergence here. So I'm expecting the probability, you see this is a beautiful hook right there. That's a nice hook right there. You see that? And I'll wait for the crossover. This is way up high. I'm looking for this to turn over with this negative divergence showing way up high. I'm waiting for the crossover here and then the move down. That's a nice little setup potential on the pound, catching a reversal back to the mean. One other one I want to show you here is on the Kiwi Dollar. It has a nice look here. You can see that we're way down low. And in this case, you can see it went back all the way to the 80 level. You'd have to hang in there on the move, but this was a nice little trade when it crossed over right about this area, and it made a punch all the way up somewhere in this area for a nice 30 pips. So that's a quick little technique for catching extreme lows or extreme highs and then trading them back towards the mean. Sometimes they work out real nicely. Other times, be careful where the market baseline is at. But overall, when the market is up and down, not showing any trend direction, then look for those extreme highs, look for those extreme lows, look for divergence in any other economic news that could affect the direction of the reversal. And you'll have yourself a nice little trade. This is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.